want to start off this video by saying something extremely important. This video is not here to discourage you in any way about Forex trading, but rather educate you on the potential downsides. There is a lot of money that can be made through trading, but at the same time, lots of losses can occur without proper knowledge nor guidance. Many people start learning Forex trading without realizing the potential negatives and end up losing a lot of money because they lose self-control. So I'm going to talk about the potential dangerous and negative side effects of trading and how you can avoid these areas. If you've been trading for a few years already, then I'm sure you have already learned about a couple of these through your experiences, just like I did. Before I get started, I want to let you know that I have a whole Instagram page where I talk about tips and tricks in the financial markets, as well as explaining my own trades. At the time of recording this video, I'm currently on a 7-week win streak and guaranteed to end up positive for the 8th week as well. So if you have any questions, feel free to DM me there. All right, let's get started. Number 1, high risk of losses. The Forex market has extremely high volatility and traders can experience significant loss in a short period of time. Also, Forex traders use leverage to trade, so the combination of both of these can lead to extreme wins, but also some extreme losses. Let's compare this to stocks. Some big blue chip stocks are very safe investments simply because they move in slow increments. You will never see a major company stock like Apple or Amazon move up or down in price more than a couple percent on a random day. Over the course of a few months, the stock might not even move more or less than 10% in the market. This makes it super safe for any retail trader since they aren't putting in millions of dollars into this type of investment. They're going to be putting in perhaps a few $1,000s, so over the course of a few months, they might only make a few $100s. Now in Forex, that same retail trader can start with the same amount of money and easily blow through all the money in the first week. Using leverage means you are risking a higher percent of your account value. So if you experience losing trades, then your losses are going to be much larger. And of course, if you're a solid trader that has good experience and risk management, then your profits can be significantly more compared to a standard stock investment. Number 2 is complexity of the Forex markets. Profitable Forex trading requires a deep understanding of various economic factors, technical analysis, and market behavior. Many beginner traders struggle to understand these concepts because of their complexity and how they impact the markets. The technical analysis is the easiest part of the charts, but once you start diving into the complexity of the market and what the driving factors of price is, then it becomes very easy to be overwhelmed and lost. There are lots of terms that you will have to learn and topics you have to understand if you want to be a full-time trader. You have to remember that Forex trading is literally a $1 trillion industry. So if you want to make money here, then you have to take it seriously. You will have to spend many hours learning, taking notes, watching videos, reading books, even just spending time in front of the charts before you start to understand what is happening. These markets are complex. They were not built for it to be easy, because if it was, then every person would be a millionaire day trader. Number 3 is going to be emotional stress. The fast-paced nature of the Forex markets can lead to very high levels of stress. Traders may feel pressure to make quick decisions, which can result in impulsive actions and emotional trading, often leading to losses. Day trading is unlike any other industry in the entire world. For any other business, you will often see that the more work you put in and the more hours you put in, then the greater success you will have. This is somewhat true for day trading, but from a completely different angle. If you are knowledgeable enough to control your own emotions, then you will be able to see success quickly and you will be able to learn from bad habits and your common mistakes. But if you are unable to have control, then you can be stuck for years in the same spot with no progress. No amount of hours, no number of trades, and no amount of luck will be able to help you escape. And I've seen a few traders already stuck in this zone where they've been trading for 3-4 years and have yet to be able to pass a funded account. You need to have control if you want to be a trader. Trading psychology will be the determining factor whether you will make or lose money. Number 4 is over trading and addiction. Forex trading can be very addictive, especially to those driven by the gambling mentality. Especially once you start to trade with real money, you'll start to feel those emotions and have the same reoccurring thoughts. Oh, maybe if I place one more trade, it has to go up. Now let me enter now, catch at the low. I want to enter right now so I don't miss out on the move. You will subconsciously think of these thoughts every time you sit down to trade, but like I mentioned in the last section, you must be mentally capable of self-control and restraint. The reason why this is so difficult is because it is part of human nature to be risky. Humans have always liked to take a chance, even if the odds are stacked against them, simply because it gives us adrenaline and a quick dopamine rush. You have to learn to stay away from it. Treat trading as if you are a robot. Completely remove emotion out of the equation and you will drastically see improvement. Stick to a proven trading plan, don't fall into the FOMO trap, and force yourself to not overtrade. Number 5, broker and market manipulation. The Forex market is less regulated compared to other financial markets, especially if you live outside the US and use brokers that are not regulated by any major country, then you are at risk. This lack of regulation can make it easy for brokers to take advantage of traders. They might secretly increase your spread on you and give you issues with your accounts, or even just completely rob you. Yes, you heard me right. There are scam brokers out there that will never allow you to withdraw your money from them, and you won't be able to do a single thing about it because of their location is on some random island in a super small country that has zero regulation for Forex brokers. You must be super careful when choosing your broker, so make sure you do your own research, read some reviews, and watch some YouTube video recommendations. If you live in the US, you will somewhat be forced to only use US brokers, which is nice because you know they are heavily regulated and you can't be robbed, but you will have a very difficult time if you are trying to find an outside broker to use. The unregulated brokers may offer you more leverage, but 99% of them do not even allow US traders. Thank you guys so much for watching and staying till the end. I hope you learned something from today's video. If you have any questions, feel free to DM me on Instagram. I will always reply to every message. Good luck trading this week, and peace out, guys.